Welcome back, investors, to Ticker Time News. I'm Adam, and Doordash, ticker symbol DASH, didn't knock it out of the park with its mixed Q4 21 earnings report, but its results and outlook were good enough to calm investors' fears, as the food delivery business has not evaporated. Although the booming days of fiscal year 20 and the first half of 21 are over, DoorDash's solid Q4 gross order value, or GOV, growth of 36% shows that ordering food for delivery has become a lasting behavior for many people, including myself. That realization is brightening an incredibly sour sentiment on a deeply oversold stock that has plunged by 60% since mid-November. In addition to the healthy GOV growth, DoorDash's better than feared performance included a few other encouraging signs. Okay, before we get into those encouraging signs, smash the like button, share this video, and click the first link in the description to get our top 10 stocks list and so much more. And if it's your first time watching, click subscribe. Thank you, my friends, for doing that. Of the encouraging signs, most notably is the company's Q1 21 GOV guidance of $11.4 to $11.8 billion. It's slightly ahead of expectations. On a year-over-year basis, the midpoint of that outlook only shows growth of 17%. But it's important to keep in mind that DoorDash is lapping GOV growth of 222% from the same quarter a year ago. Likewise, the robust business climate in Q1 21 helped DoorDash generate $43 million in earnings before taxes, adjusted of course, making its Q1 22 guidance of up to $50 million look a little soft. Now, the main takeaway is that the company can still produce solid growth and achieve profitability on this measure when conditions aren't nearly as positive. Even after its period of explosive growth, DoorDash is still adding users at a healthy pace. In Q4, monthly active users, or MAUs, increased by 22% year over year to over 25 million, setting a new record. It also tacked on about 1 million new Dash Pass members following the end of last quarter. That's pretty good. Like rival Uber Eats, DoorDash is expanding into new verticals outside of the restaurant industry, including grocery and convenience stores. While this business isn't a significant contributor yet, positive signs are emerging that non-restaurant delivery could become a key growth catalyst, reaching a $1 trillion with a T dollar market. In fiscal year 21, non-restaurant partner merchants more than doubled on a year-over-year basis. Also, in November, 14% of MAUs placed an order in a non-restaurant vertical, with some markets seeing that percentage climb to 20%. I know I did it. DoorDash's growth rates will receive a boost after its acquisition of Volt closes, which is expected in the first half of 22. The combination of DoorDash and Finland's Volt is another step in the right direction in terms of industry consolidation. It also represents a substantial market share grab and is an answer to Just Eat's takeaway acquisition of Grubhub in June of 2020. Overall, though, DoorDash's earnings report was far from perfect, as its EPS miss clearly shows. Another blemish is that net revenue margin, formerly called take rate, contracted by 60 basis points quarter over quarter due to higher driver cost. The slowdown in growth, while significant, was also always inevitable. More worrisome was whether the food delivery business would totally crumble under the weight of easing COVID restrictions and increasing mobility. What DoorDash's results and guidance show is that those fears were overblown and that its business has meaningful staying power. Well, that's what I think about DoorDash right now, but I want to hear from you. What do you think about DoorDash's mixed report? And remember, your comments make these videos so much better. Smash that like button, share this video, and click the first link in the description to get our top 10 stocks list and so much more. We've done the research so you don't have to. And if it's your first time watching, click subscribe. Thank you so very much for watching, and I will see you in the next video.